Okay, this is gonna be day one of learning how to trade. This is what I learned from the rip. I hope you have your notebooks out and everything because this is trading view. Ready? This is where you're gonna look at day in and day out. These charts, these highs, these are candles. Okay, guys. Before we go into anything, you need to know what a candle is. This is the most important part of trading. If you don't know what this is, you're fucking cooked. Okay? Now, what I just drew out here is gonna be a candle. This gonna be filled. This could be filled in, right? Whatever. Let's just say. But this is a candle. This right here, this bottom part, is gonna called a wick, right? The wick is this lowest part is the lowest part of the candle, right? Where price, the lowest the price goes within the time frame. It could be a 1 minute candle, a 2 minute candle, a 3 minute candle, or 5 minute, whatever you want the candle to be. And now this is the highest point of the candle, right? This meaning the price in that, let's say, for example, this could be a 1 minute candle. In that 1 minute, price went all the way up to here, all the way down to here. If this is a green candle, okay, guys, for me, a green candle means bullish. Bullish means price is going up. I don't know why it's fucking drawing like that. Give me a second. Let's do a path. Up, down, up, down, up. This is called a market pattern. This is gonna be bullish, right? Depending on what color your candles are on this chart. Most likely it's gonna be green. Let's say price starts down here. This would be your lowest point. Then we make a higher point. Then a higher low, a higher high, another higher low to a higher high. This means price is going up because we're making new higher points. Which, for this example right here, let's say it's a bullish candle, price opened here, right, at this bottom point of the body. This is called the body of a candle. All this is really important for future steps. This is the body of the candle, right? Meaning price opened down here, probably went down below here to its lowest point, then shot up to its highest point where the peak of this wick is right here, and then it closed down here, right? This is for bullish market structure. Now, I will show you bearish market structure. As you saw, we ended up here. We went really high, right? Then from that high point, price is going to go down, then up, but it wasn't strong enough to pass this point, meaning we just made a lower high. Then we're going to go lower and lower and lower, right? This causes a bearish effect. Bearish meaning price is going down, price is trending down, right? So we go from a higher high, right? The highest high. Then we make a lower low. We make the first low. Then if you compare this high right here, right, to this high, you see how this part is lower. You read the chart like you read a book from left to right, right? As you can tell, there's time frames down here. And every time a new candle opens, it's gonna be the next minute over. It's gonna be on the right, on the right, on the right, on the right, on the right. So you read it like a book. So you make this higher, you make this lower high, sorry, this lower high, then down to this lower low, lower high, lower low, right? You must be thinking to yourself, this kid just drew this out, right? But no, this is actually what you see on the charts. I'll make another candle for you, right? This one, can I change the color of this shit? It's gonna be red, right? So we don't confuse ourselves. So it's gonna be red, red. Oh, what the fuck, man? Right? We have this candle right here. A red candle. This same thing applies. This is the lowest the price went on this candle. The highest the price went on this candle. Now, fuck! The thing is, for bearish candles, right? This top part is where price opened on that minute. So, for example, price opened here. It went up to this highest point. Maybe in that 1 minute, it went down to here. And then finally, it closed on this bottom part. Knowing the anatomy of candles is going to help you a lot when it comes to trading, right? Let me show you the fuck, man. All right. Let me show you a real life example on the charts. If I can find it. Okay, ready? My colors is a little bit different to you guys because this is just better for my eyes. These black candles, right, are my bearish candles. Let's just zoom into one candle. So, like I said, if we open the chart all the way, right, we make it smaller and we see the bigger picture because ultimately you need to know where the market is going. You need to know the trend of the market to have a good idea and make your bias on where price wants to go, right? So if I take out the arrows, like I showed you before, we had this highest point, right? Then we went low, and then we failed to make a new high. We made a lower high. To me, this indicates that price is going to go down. As you can tell, price went down. It kind of consolidated because sometimes price does consolidate, meaning it stays in one area. But look, boom, down, lower high, lower low, still a lower high, lower low, lower high, and then boom, lower low. I'm not lying. The charts has all the information right here for you guys to check it out. If you guys don't believe me, go check it out on the charts, right? So then, as you can tell, we are going bearish, meaning we're probably going to see a lot of bearish candles. Now, if I zoom in, right, to a bearish candle, let's give a good example. This is a trade I took, probably. But let's not look at a trade. Let's look at this, right? We have this bullish candle. Remember what I said. This is a 15-minute candle. So what we're looking at is every candle is 15 minutes. So this could be, this is 16. Then this would be 16:15, 16:30, 45, back to 0. Then 15, 30, 45, 0, 15, 35, 0. It all depends on what up here, look, on the top left of your screen where my mouse is, you could change the time frame. Right now, 15 minutes is easy for me to show you guys what market looks like. Look at this candle right here, right? We have this green candle. It opened right here where my mouse is, right? Let me zoom in a little bit more so you guys can see better. Right here. Market, this not market. The candle opened right here, right? That this means price went down all the way down here, right? It went down to 25,595, 94.5, right? Then in those same 15 minutes, price went all the way back up to here at 25,634, and then ultimately price closed at this point right here, 628, right? In those 15 minutes, price moved, let's see, 634, like $50 in those 15 minutes. So this is a bearish candle. I mean, sorry. This is a bullish candle because we opened down here, but we closed above it. Now, if we look at this black super mega Drake candle, which in terminology, it just means it's fucking huge. Price opened here at this line. It's relatively to the same spot where it closed, because if you think about it, if this closed at 15 minutes, immediately price is going to shift over and open this candle after there's 15 minutes are done. So 15-minute open here, price could have probably went up here, right? So where this peak of the wick is, and then we went all the way down here, super mega Drake, all the way down here. Do you see this? Look at this big ass candle that the banks manipulated to do. And then ultimately we closed down here, meaning we opened at this high point at the start of 15 minutes, right? At 15:45. If you look down below, it says 15:45. That's when price opened this candle. Now, at the time 16, right? So that's 15:45. 15 minutes later, it will be 16. At 15:59, right before the 16-hour mark, price closed down here, meaning price closed below the opening point, making it a bearish candle. Now, you're probably asking yourself, why is there candles in many different heights? Like, why they're not the same height? Why don't they all look the same? It's because market could tell you within candles what price wants to do. For example, if we go down here, you see how we go all the way down, and then price stops right here, right? It doesn't go lower. It stops at this 15-minute mark, meaning price probably doesn't want to go back down here anymore. So then it pushes up. You see, then we have a bigger bullish candle right here. When we open, right? Then we open down here, we go up, and then you're probably like, oh, look, all these candles are probably going down. This one is going to go down. That's what the banks and the market wants you to think. Because for a later video, we'll teach you about liquidity. Liquidity is just basically the money in the market. If you're a bad trader, you are the liquidity. Because let's say you have no knowledge of anything and you just look at everything go down, you're probably like, yo, I think price is going to go down. So then you're going to do a short right here, right? And you'll be like, oh my God, price is going to go down here. This range right here where the candle wick ends, this is all liquidity. This is all you. You are the liquidity. Meaning, you think price is going to go down here. The whole time, market rejected the idea of going down, and you didn't realize it because you didn't wait for this candle to close. Look, on this bullish candle, we opened right next to it, right? We opened up here, and then we closed right here. But look, we rejected the idea of going down because we didn't sweep this candle. As you could tell, every time these bearish candles went down, we closed below this wick. We closed below this wick. We closed below this, showing that we're going to go down. This one did not, because this is indicating that the banks are just sweeping the liquidity, sweeping you out, taking out your orders to then go up, to then go up, to then go up, right? And you just have to predict or use probability setups to know price is gonna do that. And you don't want the market to manipulate you. So this is why we're going step by step of learning how to learn the chart and learning anatomy of these candles. This is called a doji candle. If you don't know a lot about trading, you should go check TJR's video of candles, right? Let me just open Google real quick and let's show you the different types of candles. All right, basically you get it. We have this hammer candle. This is showing you, take a screenshot, whatever you need to do. This is showing you the anatomy of candles. What I usually do, I don't really use these a lot. Maybe I use like this Morning Star one. This is showing you rejection. And engulfing candle is a really good one as well. And the hammer and the inverted hammer. These four are my good ones to use, right? These are my indicators that I know after looking the market for 4 months. I took 4 months to backtest. For 4 months, I realized that these candles help me know where price is gonna probably go. And I'm not using these as my entry points. Write this down. You do not go strictly off what the candle looks like for your entry model, because you will get stopped out 95% of the time. You do not use the way candles look for your entry model. Keep that in your head, please, or else you're going to get stopped out immediately. Probably blowing your funded, probably losing a lot of money and everything. All this is for you to make sure. I'm just showing you this to show you the different types of candles there is, and there's different names. Now, let's go back to TradingView, right? Let's go back to examples of how market looks. For example, right here, we had this low, right? Like I showed you before, we had this bullish market trend. Price and the market doesn't go in one direction. It doesn't always go down and it doesn't always go up. It likes to switch. It has to fill orders. It has to sweep the liquidity. It has to do a lot of things before moving up or down. For example, right here, we made a lower high still, but then we made a lower low. I mean, a higher low. Sorry, we made a higher low right here. And then what happens? We make a higher high, and then another higher low. And then all of a sudden, right, we make another higher high, showing that we were bearish. I mean, we were bullish for how long? For almost 12 hours, we were bullish. And then obviously, we're going to consolidate, right? And then we make a lower high. And then boom, we make a lower low, lower high. Probably a lower low, right? Lower low, lower low, lower high, lower low. And then you see how the market always shows you where the trend is going to go. You just need to find an entry model with these trends, right? I'm not saying you should be a trend trader. A trend trader is someone that's, oh, we're bullish. All right, let me just throw since we're bullish, let me just throw a bullish trade, right? No, don't do that. You want to go down to the lower time frames, look for an entry model that doesn't go against the trend. You never want to go against the trend. This is how you get stopped out, and this is how you're going to take low probability setups if you go against the trend. Never do that. I think it's a good place to stop for knowing about candles and market trends. For homework, yes, I am giving you homework. I want you to go on TradingView, go on NQ. This is what I trade. I trade the Nasdaq and the S&P, right? Yes. I'll make a video tomorrow explaining why I have to use both. If you want to be a futures trader, trade NQ or ES. For homework, just look at market trends, please. Like, jot down 5 market trends. I want you to lower high, lower low, lower high, lower low, or higher high, higher low, higher low, higher high, whatever. Locate bullish and bearish trends. Also, remember the candle anatomy. Look up how the candles work. Study the charts. Don't you don't maybe this should take you like 30 minutes. Look up. I want you to look up 5 bearish trends, 5 bullish trends, and just send it in the comments down below and write I did the homework, because this is gonna help you learn the basics before going on to learning the meat and potatoes of everything and the fucking juice of everything. You need to learn the basics before going to advanced stuff, and that's for everything in life. So just tune in tomorrow for part 2 and enjoy.